Over the past 15 years, one stock that has outperformed the S&P 500, outperformed Microsoft, Apple, and even Amazon is Domino's Pizza, stock ticker DPZ, currently trading at $445.01 per share. And like I just said, if we look at them since 2009, you can see the total return for this company is at over 8,800% compared to the S&P 500's 476%. So in this video, we're going to be taking a deep dive into Domino's Pizza. We'll be looking at their recent investors presentations, looking at their recent earnings reports. We'll be breaking down the dividend metrics for this company, and of course, calculating the intrinsic value. So let's go ahead and jump into it. And like always, if you'd like to be able to download any of my spreadsheets and get access to the ticker data add-on in Google Sheets, you can download ticker data at my link in the description. But let's go ahead and dig into this. Now, Domino's Pizza over the past year has done very well, up around 42.57%, and year to date up around 8%. And this is a holding I own in my personal dividend portfolio, but I haven't added shares in a little while. If we go ahead and take a look at their most recent earnings report and scroll down, we can see in Q4 they had GAAP earnings per share of $4.48, which was a beat by around 8 cents, but revenue came in at around $1.4 billion, which was slightly up year over year, but missed estimates by around $20 million. Now, during this report, they also announced something that made me very excited as a Domino's shareholder, and that's they increased their dividend payout by 24.8%. That is an absolutely massive dividend increase, but they also announced a $1 billion stock buyback, which is another great way to reward shareholders. So let's go ahead and touch on those dividend metrics. If we come over to my dividend breakdown spreadsheet, let's go ahead and come up here and plug in DPZ and hit enter, and you can see all of this data is going to automatically load in. Now, at its current price, Domino's Pizza has a dividend yield sitting at 1.36%. So yes, this is a low dividend yield company, but the dividend growth this company has seen over the past decade has been absolutely phenomenal. If we come down here to our yearly dividend payout chart, we can see in 2013 they were paying out around 80 cents, but it's bumped all the way up to $4.84 just 10 years later in 2023. And after this most recent dividend hike, they're now paying out $6.04 per share in dividends. That's a 10-year dividend CAGR of almost 20%. That's pretty mind-blowing. But here's what's really beautiful about this dividend growth. All the way, it has been backed by free cash flow growth. So if we look at the free cash flow payout ratio over time, we can see for the most part, the free cash flow payout ratio has stayed in the range of 20 to 40% over the entirety of the past decade. So when you can find a company that has massive dividend growth, like a 20% 10-year dividend CAGR, and the free cash flow payout ratio stays steady, that's a sign of an extremely healthy dividend paying company. We can see the free cash flow payout ratio sitting at about 35%, so only 35% of their free cash flow is currently being used to pay out dividends. And if we come down here and look at the free cash flow versus dividends paid out chart, we can see that the free cash flow is easily covering those dividend payments, and free cash flow is also growing at a pretty rapid rate, as we can see with the 5 and 10-year free cash flow CAGR. So you may be wondering, what has been the catalyst for a company like Domino's to grow at a rate above Amazon, Apple, and Microsoft over the past 15 years? And really, I'd say it's a combination of a few things, but if we go over to their investors presentation, we can see what they think their proven model for success is. Step 1 is lead with innovation, leverage on a global scale, and this will drive superior return. So how have they been leading with innovation? Well, years ago, Domino's was one of the first pizza companies to start focusing on technology to scale at a higher rate. And we can now see over 80% of US sales are via digital channels for Domino's. And so while this is something they've done well over the past 15 years, they're currently looking for new ways to scale using AI. And this is what's really interesting about the company. In October of 2023, Domino's and Microsoft announced they would be teaming up with the goal of creating the next generation of pizza ordering and store operations with generative AI technology and cloud computing power. And basically what that means is if we scroll down, we can see the goal is to help store managers save time on daily tasks such as inventory management, ingredient ordering, and staff scheduling. It will also help streamline pizza preparation and quality control with more predictive tools. So it's clear Domino's is still focused on leveraging AI and technology to scale at a high rate. Now, AI isn't the only thing Domino's is currently doing to scale at a high rate. They're also focusing on their updated loyalty program, and they talked about this in their recent earnings report. Domino's announced how under certain conditions they would be giving away a free pizza, but the catch was that consumers must not only place their order online, but they must also have joined the rewards program. And through this marketing promotion, Domino's was able to add over 2 million active members in the fourth quarter alone to the rewards program. And to top all this off, Domino's is still expecting to be able to scale their stores at a high level, especially internationally. They currently have 6,762 US stores and over 13,400 international stores. But as I talked about in their recent earnings report, they have a 2028 target of over 18,500 stores internationally, and long term they are hoping for over 40,000 stores. And so if we look at how the global store count has grown from 2010 to 2022, it's grown at a compounded annual growth rate of 6.5%, going from 9,351 stores to 19,880. And if we go ahead and jump over to the 25th slide on this investor's presentation, we can see how operating income has grown as a result at a 10.7% compounded annual growth rate. And here's what's potentially the craziest part. From 2010 to 2022, earnings per share had a compounded annual growth rate of 20.4%. So when you start to realize what's been going on behind the scenes at Domino's Pizza, it's pretty evident why this company has seen phenomenal shareholder returns over the past decade. Not only have the total returns been phenomenal, but like we just saw, the dividend metrics and dividend growth have been absolutely phenomenal as well. And if we actually jump back over to Seeking Alpha, click on financials and the balance sheet, if we scroll all the way down and look at shares outstanding, one of the things you'll notice is they have done a great job of buying back shares over the past decade as well. And this basically gives more ownership to the shareholders of this company. So obviously when we look at the historical data and the forward-looking projections, there's a lot to like about Domino's Pizza as of right now. But is it trading at a good price at $445.01, up over 42% over the past year? So is it still trading at a good value? Now to answer that, let's go ahead and jump over to my stock valuation spreadsheet. Again, you can download this at Ticker Data at the link in the description. Let's go ahead and come up here and plug in DPZ and hit enter. And you can see all this data again will automatically load in. Now the company has a beta of around 0.86, so you shouldn't see a whole lot of volatility with this company. Let's go ahead and jump into our first valuation, which is going to be Graham's valuation. I'll go ahead and zoom in and we can see our formula here. Basically, we're looking at the earnings per share growth of this company, and we can see right here the estimated earnings per share average moving forward for Domino's Pizza. This was automatically imported to my spreadsheet with the ticker data function, but it's coming in at 15.76. So I used 15.76 for Domino's Pizza. I applied analyst growth rate projections of 14, took the current yield of AAA corporate bonds, which is Y, and after applying all these into the formula, we came to an intrinsic value of around $295.38, which is a decent bit below the current trading price. Now, the next valuation we'll look at is our discounted cash flow analysis. And again, in this scenario, we're projecting a growth rate of 14% to the future free cash flows of the company. Once we've used that growth rate to project the future free cash flows for the company, add those future free cash flows together, add cash and cash equivalents, subtract out total debt to get equity value, divide by shares outstanding, and then we come to a discounted cash flow price per share of $352.35. Now the next valuation we'll look at is the multiples valuation, and this one is an interesting one. If we look at these comparable companies, they have a price to earnings multiple that is relatively high, and the average PE for these companies sitting at about 24.67. Now Domino's Pizza's earnings per share at 14.8, when you multiply that with the average PE, we come to an intrinsic value of $365.15. But if we jump over to Domino's Pizza, look at that forward price to earnings again, 28.4. If we click on valuation and scroll down just a little bit, we can see that 28.4 price to earnings forward looking is actually in line with Domino's Pizza's 5-year average. So I think you could argue that the high price to earnings multiple for Domino's Pizza is pretty standard and that they might trade at a little bit of a premium. And after the past 15 to 10 years of growth that they've seen, it's kind of easy to see why that's the case. So when looking at this multiples valuation, yes, they do have a higher price to earnings than the average of their peers, but this company on average has traded at a higher multiple over the past 5 years. So that's definitely something to keep in mind, but it doesn't show up in our valuation. Now, the last valuation we'll look at is going to be our dividend discount model. And again, this company has seen phenomenal dividend growth over the past decade, and the dividend discount model values the company based on how much that dividend is growing and how much the company pays out in dividends. So you can see here we're projecting a dividend growth rate of 7%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $430.85. So when we jump over to our output tab, we can see all 4 of the valuations that we use in this scenario, and averaged together we get to an intrinsic value of around $361 per share. So yes, it looks like at its current prices, Domino's may be a little bit overvalued, but I would argue they probably do trade at a premium. Now, one thing that I do have to point out with Domino's Pizza is the total debt. The total debt is a little bit higher than I'd personally like to see it as of right now. If we jump over to the balance sheet, scroll down just a little bit, we can see total current assets sitting at around $817 million. But if we keep scrolling down, let's look for total current liabilities sitting at $547 million. But if we look at long-term debt, currently sitting at about $4.8 billion. So yes, this company actually does have a little more debt than I'd personally like to see. Now, like we saw on our dividend breakdown sheet, they are generating plenty of free cash flow. So if paying down debt is a priority for them, they do have that option, but it really comes down to what is management's priorities with capital allocation. Now, like I mentioned earlier, Domino's Pizza is a company that I hold in my personal dividend portfolio. If I blow up this chart, we can see I'm currently up around 35% on this position. While on the surface level, it does appear that this company may be a little overvalued right now, I personally have no plans to sell this company. company. I absolutely love the free cash flow growth that I've seen from them and the dividend growth as a result of that. The end goal with my personal portfolio is to one day be able to live off dividends. So if I want my portfolio to be able to grow dividend payments at a high rate, I need my holdings in my portfolio to be able to grow their free cash flow at a high rate. So in my opinion, Domino's Pizza is the exact type of company I need to be looking for. But go ahead in the comments down below and let me know what you think of Domino's Pizza stock. Like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on within Google Sheets, then you can head over to tickerdata.com at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.